bosses of 8 major cryptocurrency firms are appearing before a U.S. congressional committee looking into the risks and benefits of new financial technologies.
They include the CEOs of Bitfury, Coinbase and Circle. The hearing is aimed at finding ways to boost consumer protection and prevent illicit activities such as money laundering and terrorism financing. Well, Sultan is the Director of Data Science at Quantum Economics. Oz, welcome. First of all, tell us about the significance of today's hearing.
It's relatively significant because this has been discussed for a period of time, and what you have now is Maxine Waters and Senate Democrats moving forward with a series of questions about not just, one, what is the state of the industry today, but two, what is the security of the industry today, and how does that actually affect customers, institutions, and other players that are actually looking to get inside of the market?
What are the main challenges when it comes to attempting to regulate cryptocurrencies?
It's a tapestry. You know, within the United States, we're a republic, and a lot of people don't necessarily understand that, but we have state-level legislation that sort of comes first. If you look at it from the SEC to the Office of the Comptroller of Currency forward, while the OCC has, said things like banks can crypto custody, we haven't really seen any banks move forward. And at the same time, where we have states like Wyoming launching new corporate formats, organizations such as the DAO, we have other states sort of wringing their hands. And when you pull that back from the United States and start looking on an international basis, the challenge becomes even more pronounced. For example, if you look even a couple of years ago, Gibraltar was a bastion of crypto activity in Europe, but with conflicting regulations from the EU, the EC, and Legrand, as well as, questions on what happens on a state-by-state basis within the European Union, you end up with a lot of quagmires and you end up with a lot of hand-wringing. And that limits the amount of capital that venture capitalists and large investment firms are willing to put into this. It also hampers the growth of things like electronically traded funds. And it sort of stymies the industry from really kind of getting the type of stronghold that it should have in an international basis.
I wonder, how is this kind of scrutiny affecting an already rather volatile crypto market?
We've been within a $30,000 to $60,000 Bitcoin band for the bulk of the year. There were a number of analysts that are saying things like it's going to break out to $110,000 by January. But looking at the fact that we have deflationary pressure right now pushing it right below the $50,000 mark, I doubt that within a 60-day period of time you're going to see a little bit more than doubling of Bitcoin. At the same time, as we look at a number of altcoins that are out there, it's a mixture of looking at market pressures and then also looking at what is going on with the tokens themselves. Ethereum, for example, has had a number of changes. It moved from a proof of work to a proof of stake mechanism, meaning instead of actually throwing miners and hardware at it to create the cryptocurrency, folks can now stake it or do similar things to what you would do in putting it into, say, like a bank fund, and that would be interest bearing, but in this case it generates Ethereum. And then a number of new players that have entered the market, like Shiba Inu, have seen massive and explosive growth in very short periods of time. So it requires a new degree of analysis, but at the same point in time, it really requires countries to not just educate their legislators, but figure out how they want to approach these new burgeoning digital assets that have only, the future to really craft for themselves.
Sultan in New York, thank you very much indeed for talking to us.
Thank you.